So part A asks what causes interest rate on German government bonds become negative. So this is because of what we call the quantitative easing. So quantitative easing by the Federal Reserve, by the European Central Bank, and other central banks around the world has driven long-term interest rate to a very low level. So quantitative easing will drive low long-run interest rates, a long-term interest rate. Okay, so those kind of a low long-term interest rate to be very low. Eventually, investors will bid up the price for some long-term government bonds in Germany, and a few other countries to such a high level that the yields on the bonds were actually negative. So investors will receive less when the bonds matured than they were paying to buy them. That's the reason why we see a negative. And for part B, why are investors willing to buy bonds with a negative interest rate? So that's an interesting one. So the interest rate on many corporate bonds and bank deposit being at very low levels. So investors did not believe that the interest rate was sufficiently high to compensate for the default risk on those bonds and deposits. So basically means that even if there's kind of a low level interest rate for those like bank deposits or corporate bonds, consumers and those investors just believe that those corporations and those small banks can be easily crashed down. But for the government, it's not the case. So investors are willing to receive a negative nominal interest rate from the German government because they believe that there's no chance government will default. So that's the only reason why they, even if they get a negative interest rate, they still prefer to hold those bonds.